Right then, so good morning, New York. So, starting with US yields, we've seen them tailing off at the start of the week, um, and they've moved into a nice level here of expected support. So, we've had this sort of trickle down, so we could expect a nice firm move to the upside. We're taking into account this harmonic formation here for a move up, and we will remain bullish until a break of the structure over here of around 3.86. And consequently, we have seen the dollar ease back ever so slightly in the open. And in doing so, it's heading into the bulk of Friday's bullish close. But as a reminder, if you want to head over to the pre-open market analysis, we had this explanation of this formation for a move up. So all the while that the price is firm at this juncture, the bias is to the upside. And the structure in that regard on the hourly chart here is round about 112. So above there, the bias is long. A quick glance over then at FX Street's calendar. There's nothing that's jolting out here for us to be too concerned for the New York session. So everything is good to go in terms of the pairs. And we got Rogers speaking in the afternoon for the Bank of Canada, and then we have the Business Outlook survey. Empire State Manufacturing, that's coming up in the next 16 minutes. But that's during the sort of stop hunt hour, so we're not too concerned about that either. So we're good to go in that respect. And then in the evening, we'll have afternoon for us in New York, we'll have the consumer price index from New Zealand, and then later on in the evening we'll have RBA's Bullock speech ahead of the RBA minutes. And then looking at, first of all, let's look at cable. So that's really seen the most activity at the start of the week. It gapped up in Asia, stalled, and then moved up. Essentially, we have markets shorts being shaken out by the prospects of a U-turn in fiscal policy with the new appointment of a new chancellor. Hunt, who made a statement today, and cable popped up to around 113.30 at the same time that the US dollar was a little bit softer. But it came all the way back in to around about 112.70. So the markets are not really buying much of it. Yeah, so those are the highs for the day: 113.30, gapped up from 112.08. We had the Bank of England's Governor Bailey speak over the weekend. He was advocating for firmer rate hikes. So that too had been priced into the gap at the start of the day. And it took our swing trade out at break even with this push here. But what it has done is it's left us a harmonic W formation. So with the price moving into resistance, so far not very convincing on the upside with this wick. And if we pull that back a bit to the daily chart, we remain on the front side of the bearish trendline resistance. And we're on the back side of this sharp correction. And the price has moved out from that to move back in to stops, shorting. And it's collecting itself around here. So really what we want to see now is a break of the support of this trend line here on the lower time frames for a convincing move and probably a pretty sharp, steep move to the downside. And in terms of that regard, so the safest bet to the downside is below 112, which is the structural point here. But the market would be expected to break down as it penetrates below 112.50. Now, what I'd like to see at this point, between now and the close of this candle, so we've got 38 minutes until the close, is as it's doing, we want to see this push up. We want to see this push up, and then that'll be fantastic if we can hold below these wicks, and that will give us the ammunition in the stop hunt that's occurring currently to come down to attack the 50s. So we could see a scalp come about in Wall Street's open in an hour's time. As you can see, that's already starting to play out. So we've got the stop hunt occurring as New York traders come in. And we're moving into level 3 of the box. This is the opening box. So the thesis is that we've got the peak formation being put into place. That was put into place in London, and we're coming into that to pick up the liquidity left behind. 5 seconds to the data. I'll just let that run.
For the Empire manufacturing rate, looking at the breakdown, the prices paid index a gain of 48.6 versus the prior of 39.6. Orders coming in at 3.7, unchanged from the prior month. As well, the employment index at 7.7 versus prior of 9.7, and the 6-month business conditions at minus 1.8 versus prior of 8.2. Again, to repeat, that's the US Empire manufacturing coming in less than expected at minus 9.1 versus expected at minus 4.3.
Excellent. Let's have a little move higher, please. So the low of Asia remains intact. We've got money below the lows of the equities hours of London, and the late session also in the middle of the day also below 50. So the round numbers is what's looking good. So what we want to see here really is a build-up of resistance and a move to the backside of this trend line. And if we can get involved at the round numbers for 50 pips to the downside, then that would be fantastic. So we've got some time here for all of this to play out. We've got an hour, just less than an hour before Wall Street officially opens. So we could see that build up occur over here and slide out. And if we get ourselves some bearish structure and an in, then that would be good for the thesis to come down all the way back into the Asian, well, tier 1 really of this box. If we look across at the euro, there's nothing really here that's standing out in terms of an opportunity. We're right in the middle of the box, or towards the upper end. We're entering the level 3 of the box. We'd need that to move up for a potential short, but we've already had a clear out of stops in London. We've had the move up, so the thesis is a glide up into the peak formation for a potential move back to the downside, but it's all really contained at this point. So it's early days for the euro this week. Started out in a relatively narrow range without any particular bias one way or the other. Moving over to the Canadian dollar, following that wonderful trade that we were able to get involved in last week. 8R it was, something like that. So we've had that strong impulse, and we're just trickling back down now into these longs, positions that are the stubborn bulls, if you like, that are holding on. And in doing so, that's giving us the ammunition for a firm move later in the week to the upside. So we may get on a daily chart here, we may get sort of a last ditch efforts and thrust up into resistance before a move back into sort of an equilibrium of this trend, because it's really moved sharply higher away from the average. But remaining bullish, well above 137, the figure and this structure for CAD. But looks like it's trying to come into the midway point. 137.50. So will we get some bullish structure for a move up? We'll have to wait and see. So the dollar's getting hammered here on the back of that really poor data, which is good to see because we want that to come lower to go up. But you might look at that survey in two respects. I mean, the price of oil is sky high, inflation impacting. So regardless, the Fed is going to stay with stay on the hawkish side. So this will be quickly swallowed up. Now, so this is the stop hunt, right? We're moving sharply into longs. We want to see, as I said, the 50s hold up. And if they do, then we could be looking for entries so long as we stay on the front side of this trend line for a move up in the bulkier part of the US session, which is coming up in round about 45 minutes time. But by the end of this 15-minute candle, we want to be on high alert for what price action we're seeing over here. And we'd see a break of this trend line. So somewhere in here would be the sweet spot for a move up. And then for the Aussie, well, we have the sort of a reverse scenario, really. We've got the sharp move up. This is sort of the stairs, climbing the stairs to take the elevator down scenario. Having said that, we've got the minutes tonight and the RBNZ in the New York afternoon, late afternoon, after the close, early Asia. So that Aussie's really taking off here, moving right up into this price imbalance, top of the box, heading into the upper quarter of the 62 handle. So we'll just sit back and let that play out. Naturally, gold's getting a lot of relief from the data as well. Move lower in the dollar. And if we refer back to the start of the week's analysis, as I said, on the 4-hour chart, for instance, we had this M formation and there would be prospects for the open to move up into this price imbalance that we talked about, around about a 62% retracement at the levels that we're entering in 116.66, 116.68, thereabouts, pressing up against this micro trend line for prospects of a move back down to test last week's low. So if we pull ourselves out to the 4-hour chart, we can see that taking place. The question now is whether this will hold. And on a news catalyst, the knee-jerk reaction usually doesn't last so long. So we've had that move in. So we'll just sit back and see how that plays out. But in terms of the hourly trend, we really need to see a break of structure before we get involved with anything for the downside. And the structure for me is right the way down in the 50s here. So right, so we'll wrap it up there, and if there's anything to do in the next sort of half an hour, the next couple of hours, I'll definitely be posting a new video. But if we just stay lofty at these levels, if the dollar doesn't come back into shape, then there's not going to be much to do today.